Greetings from Choice Equity Broking. Myself Madhumita, Assistant Manager. With Donald Trump winning a second term as US President, what has happened to the US economy? Here are some key questions that investors are asking for. And the first question is, will the Fed delay rate cuts? And the second question is, will the inflation rise again? The third one is, how will this affect investors and the economy? So let's break it down. What's the Fed's plan for rate cuts? The Fed has kept interest rates steady at 4.25% to 4.5%. So what the Fed is watching? And the first one is economic slowdown. If the economy weakens, the rate cut could help to boost growth. Next, here comes the Trump's trade war with Mexico, Canada and China. On February 1, 2025, Trump imposed new tariffs on US trade partners, and the tariffs are as follows. Trump imposed 25% tariff on all Mexican imports and 30% tariff on Chinese imports across various industries. Trump imposed 25% tariff on Canadian imports except oil and energy, which face 10% tariffs. In response, China, Mexico and Canada introduced retaliatory tariffs, increasing cost, disrupting supply chains and adding uncertainty to the markets. Now you may all have a doubt that how will this impact inflation and Fed's decision? And the first impact is higher prices for consumers. Tariffs increases the cost of goods imported from Mexico and Canada, affecting cars, foods and electronics. If business pass these costs to consumers, inflation may stay high, forcing the Fed to delay rate cuts. And the second impact is due to economic uncertainty. It is due to the higher cost for business and supply chain disruptions affecting manufacturing and agriculture. If growth weakens significantly, the Fed may cut rates to prevent a recession. Next, here comes the impact on jobs and wages. The February jobs report is expected to show 160,000 new jobs, signaling steady job growth. But trade tensions could hurt hiring in key sectors like manufacturing, agriculture and retail. If job growth slows, the Fed may cut rates to support the economy. But if wage growth pushes the inflation higher, then the Fed could delay the rate cuts. Now let's see, will the Fed cut rates in the March meeting? There are two scenarios, and the first scenario is no rate cuts in March. Given uncertainty, Fed may hold the rates steady at 4.25% to 4.5% in the March 19 meeting. And the second scenario is rate cut later 2025. If inflation continues to decline, then the rate cuts may come by May or June 2025. However, if tariffs push inflation higher, cuts may be postponed further. So, the Fed's decision hinges on inflation trends, job growth and economic stability. If inflation remains high, we may expect delayed rate cuts. If economic growth slows, Fed may cut rates to prevent a recession. So, investors should stay informed and watch for key Fed updates. Happy investing. This is Arun signing off.